You have a very long life ahead of you.
Predicting what's to come for the housing market is extremely difficult. It defied expectations and came roaring back after a fleeting dive during the pandemic. 2021 is on track to be the busiest year on record, but Royal LePage sees something else in the cards for next year.
We had an uncomfortably high level of price appreciation, well above 20% in many parts of the country. We do see that easing off.
Nationally, home prices are forecast to climb by 10.5% to average out at just under $860,000 next year. A single-family detached house is expected to go up in value by 11% to $918,000. Condo prices forecast to rise 8% to just under $600,000. A condo comeback is expected to continue in major urban centers, fueled by an increase in newcomers and students from Canada and abroad. And with that comes renewed interest from investors buying apartments to rent out, especially in the Greater Toronto area.
The gap between detached homes and condominiums has grown to a point that we haven't seen for years. So condominiums are becoming an attractive alternative again because of affordability.
The hottest markets, Toronto with an 11% bump, Vancouver forecast to climb 10.5%, and Halifax up 10%, driven mainly by Ontarians. But there's also growing interest in more affordable options.
It's gratifying to see Calgary, Edmonton, Regina, St. John's, Newfoundland, all starting to show price appreciation because it's been a very quiet 5 years.
Royal LePage sees a winter that's busier than usual. Omicron-related restrictions fueling more frenzy as employers slow or pause plans to return to the office. And some homes become temporary schools, restaurants, gyms, and getaways. Economists think of it as the storm before the calm.
Ultimately, I do think it's interest rates that are going to have to be raised to bring this market to heel.
And that's just what rate hikes are intended to do, slow the parts of the economy that do look a bit overheated.
Anne Gaviola, Global News, Toronto.